Hi guys, and welcome back again. We are continuing with learning module 4, recording credit and sundry transactions, learning example 4a. So, let's carry on. Okay, it said on the 14th, made an EFT to Geronimo's in full settlement of the amount due, less 5% early settlement discount. Okay, so two transactions took place there, so let's do the first one quickly. Okay, so let's see now. First, Geronimo's was a creditor. Okay, so Geronimo's was a creditor, so that'll be creditor's control. Okay, did we pay cash or not? Made an EFT, so that'll be bank. So let's start off with that, sorry. So main account will be bank, which is an asset plus minus, and we're paying our creditor's control, which is a liability minus plus. So our bank decreases. Okay, we have to go and calculate the amount. So let's quickly do that. So Geronimo's, if we look at the creditor's journal, we bought from them for 82420, and then we returned stock or something for 6,900. So that'll be 6,900. So let's deduct that from each other, or subtract. So that'll be 75520. Okay, so that's 75520. So now once again, so we owe them 75,520, but we got a 5% early settlement discount. So let's go calculate that, and let's use that new magic block. So we've got the actual selling price, the discount, and then the discounted selling price. So let's do that quickly. Okay, so the actual selling price is 100. We got a 5% discount, so the discounted selling price will be 95. And remember what I said, this is the VAT inclusive amount. So 75520 is the actual selling price, 75520. So let's do that calculation. So it's 75520 divided by 100 multiplied by 95. And that gives you an amount of 71744. And then to calculate the discounted price, you can use the magic block, which I'm going to do now. 75520 divided by 100 and multiplied by 5, which gives you 3776. Okay, so in other words, our bank is decreasing with 71744, and our creditors are decreasing with 71744. So let's quickly put that into the book. So that'll be your cash book payments. As soon as I can find them. Yeah, there we go. Cash book payments. It's an EFT. 14th. Okay, Geronimo's. And 71744. And creditors control will be 71744. Okay, but we are not finished with it. Remember, they gave us a discount, so on our books now it shows that we still owe them money, so the amount that they gave, the discounted amount, needs to be calculated. It needs to be placed in the journals. So let's quickly do that then. Okay, so it's a discount amount, other pen. So now we're looking at creditors control. It's a liability minus plus. The other leg will be your discount, will be our discount received. And because SA sees this as an income, we have to pay VAT output on that amount, liability minus plus. Okay, so we have the discounted amount, so creditors control will be decreasing with 3776. Discount received will be seen as an income, so that'll be a credit amount of the VAT exclusive part of 3776, so 3776 divided by 1.14, and that will give you 3312. I'm just looking there, 28. And then your VAT output will be that one minus that one, the 3776 minus 3312.28, and then you have 463.72. Okay, so now we need to put that into the journal. So which journal will that be going into? That's one of the exceptions, when we get with discounts and stuff. I know creditors control are becoming less, but it's not going into the creditors allowance journal. But anything that's got to do with discounts received or interest received or interest paid goes into the general journal. So let's quickly do that one. So this will be JV5, 14th. So let's do our debits first. It's creditors control, and that's Geronimo's amount 3776. VAT output is 46372. And then discount received is 3312.28. And then, prompt settlement discount received. Great stuff. Now let's draw that line. Great. All right, let's continue. Let me just mark it again. And it was in the cash book. Payments. All right, excellent. And now we say we paid for diesel fuel for the delivery vehicle from petty cash. That one should be quite straightforward. All right, so let's see. So we've got petty cash. And then the other leg should be fuel. As we know that you cannot claim VAT for fuel, which is an expense, minus plus. Amount 350. So you credit petty cash 350 and fuel is an expense 350. So let's quickly put that one in there. Petty cash PV11, the 14th. Diesel, the details is a diesel for van. Amount 350. And then in the sundry account 350. That's for fuel. Okay, that one was easy enough. No funny stuff there. Okay, so let's quickly just mark all of this again. Petty cash, that one, and that one. Okay, on the 15th, alright, purchased a new printer cartridge and printing paper for the office on credit from Smart Offices and received their credit invoice 886.40. Alright, 886.40. Once again, back to your T accounts, always. So we bought on credit, so that'll be your creditors control. So liability minus plus. We purchased stationery, so your other leg is postage and stationery, which is an equity minus plus. Minus plus. And then lastly, money went out, so it's VAT input, which is an asset plus minus. Okay, so in other words, 886.4, so your creditors increased with 886.4. Postage and stationery gets debited by the VAT exclusive amount, 777.54, which is 886.4 divided by 1.14, and then your VAT input is 108.86. 108.86. Alright, so creditors control are increasing, so that goes into your creditors journal. So invoice is, okay, it's F17, 15, it's Smart Offices, it's the details. Okay, then creditors 88640, VAT input 108.86, and then in the sundry accounts 777.54, which is postage and stationery. Alright, great. So now that one is completed. And another page is done. Okay, then cash sales according to cash register roll 11217.75. So cash sales according to cash register roll 11217.75. Okay, so let's draw it. So it's a sale again. So now we're going to draw 5 T accounts. So we've got bank, which is an asset plus minus, sales, equity minus plus. Okay, money came in, so it's VAT output. I always say that. It's a liability minus plus. And then we mustn't forget about our trading inventory, which is an asset plus minus, and our cost of sales, which is an equity minus plus. Alright, so let's quickly do this. Okay. So our bank increased with 11217.75. Our sales is an income, so the VAT exclusive amount 9840.13, and then your VAT output is 1377.62. And now you need to do the magic block. Like I said, I'm not going to draw the magic block, I'm just going to calculate it. You use the VAT exclusive amount, so that'll be 9840.13 divided by 100, divided by 150, multiplied by 100. And that gives you 6560 Yeah, 6560.09. So your trading inventory will be 6560.09. Cost of sales gets debited with 6560.0. I mean 09, not 08. Sorry. Okay, so let's put that let's write that in our books. So bank increases, that'll be your cash book receipts. So let's quickly do that. As soon as I find one. There we go. So it's cash register roll, 15. It's cash sales, 11217.75 in the analysis of receipts. Okay, VAT output 1377.62. The sales 9840.13. And then your cost of sales, trading inventory 6560.09. Okay, easy peasy. 886. Okay, I just want to. Which number did I do now? Number 23. Oh, here we go. Sorry. It's always a problem when you've got so many papers on your desk, on the table. Great stuff. Well, this one all seems quite basic, so we should be able to go through them rather quickly. Okay. Sold trading goods on credit to Sunil Govender. So we sold trading goods, so that'll be your debtors control. So it's debtors, which is your asset plus minus. Then sales, it's an equity minus plus. And money came in, so it's VAT output. It's a liability minus plus. And because we sold stuff, once again, we need your trading inventory as well as your cost of sales. Okay, trading inventory, asset plus minus, and cost of sales, equity minus plus. Alright, so let's quickly do that. Let's see the amount, 4332. So let's quickly tackle it. So your debtors increase with 4332. Your sales gets credited with a VAT exclusive amount of 3800 and your VAT output 532. And then once again we need to calculate the trading inventory cost of sales. So you take the VAT exclusive amount 3800 divided by 150 multiplied by 100, and that gives you 2533.33. So 2533.33, cost of sales debited 2533.33. Great, so let's put that in the book quickly. So that will be your debtors journal. So let's do that one quickly. Debtors journal, here's my debtors. D4 17, it is Sunil Govender. Then it's 4332. VAT 532. Sales 3800. And your cost of sales and trading inventory is 2533.33. Alright, so that's done. Now where did I put my other paper now? Sorry, here we go. Okay, so this will be your debtors journal. Done, and done. Great. Okay, sent the consignment to Sunil Govender and paid for the courier from petty cash, but debited the cost 224.5 to the debtor's account. Okay, so basically we use the petty cash asset plus minus. So we paid the courier, but when you did your books, you didn't put it through as an account, as on the courier account, whatever account you might have. You put it through on your debtor's account. Yeah. So debtor's control, it's an asset plus minus. Okay, so the amount is 224.5, just want to confirm, yeah, 224.5, and then 224.5. Alright, so that's easy enough. Let's put that one in the books quickly. So that'll be petty cash, PV 12, 17, it was courier fees for Sunil Govender, petty cash 22450, and then in the sundry accounts 22450, and that was debtor's control. Okay, so that one sent a consignment to Sunil Govender and paid for the courier fees from petty cash, but debited the cost to the debtor's account. So one must always just read carefully what they write, and then just answer accordingly. Sorry, just marking again. All right. Purchased a microwave. Okay, so we purchased a microwave oven for the staff kitchen by check from Future Kitchen Supplies. So we paid for check. Okay, so the one will be bank, and then equipment. So it's asset plus minus, equipment, asset plus minus. So our bank decreases. Bank decreases with 2,800. And our equipment increases with 2,800. And we cannot claim VAT on it because it's for staff. So yeah, so that is considered entertainment, so we cannot claim that VAT, so there's no VAT payable or trackable there. Alright, so that'll go into your cash book payments. So just give me my papers. Cash book payments, there we go. It's the 11th, or document number 11 on the 18th. It's Future Kitchens, 2,800 in the bank column, and then equipment 2,800 in the sundry accounts. Okay, that was easy enough. Okay, let's go on to the next page. Great stuff. Alright, so let's see what's next. Purchased 4 coffee tables on credit at 840.75 each from Tudor Enterprises and received their invoice number E495. 3 of these tables are for resale purposes, whilst the other will be used in the reception area of the business. Okay, so let's go first. That's bank. Wait, did we buy cash or credit? Purchase fork on credit, so not bank. So that will be creditors control. Okay, creditors control is a liability minus plus. Then, okay, trading inventory, because 3 of them are for reselling purposes, which is an asset plus minus. And then we've got the VAT amount, it's VAT input. Money went out, so VAT input, it's an asset plus minus. And then one of those tables are going into the front lobby, and I would have personally called it furniture, but I see in the memo of this exercise they put it under the equipment account. So I would have personally done it under furniture, because it makes sense. It's a table, it's furniture, but they did it under equipment, so I'm going to stick to that. So that'll be equipment. It's an asset plus minus. All right. So now first let's go have a look. So they say the tables are 840.75 each, and we purchased 4 of them. Am I right? So that then is 3363. So our creditors increased with 3363. Alright, and that's now the VAT inclusive amount. Now the trading inventory increased with 3 of them. So that'll be 840.75 times 3. It's 2522.25, but it needs to be the VAT exclusive amount. So it's divided by 1.14. So your trading inventory then is 2212.5. So your trading inventory increased with 2212.5. And then the VAT amount will be calculated, 3363 divided by 1.14 equals that minus 3363. So your VAT amount will be calculated on the full amount there, because everything is still going towards the business. So your VAT input will be debited with 413, and then your equipment, only one table will go towards the equipment, which will be 840.75 divided by 1.14, and that's 737.5. So our equipment is increasing with 737.5. So I know this is quite a mouthful, but we purchased it. We claimed the VAT on the full amount because trading inventory and equipment, so it's all going towards the business, so you can claim that VAT back, and then you just work out the VAT exclusive amount of one table and the VAT exclusive amount of 3 tables. Great, so let's quickly get this in the book. So our creditors control is increasing, so that will then be our creditors journal. So creditors, where am I now? Ah, here we go. Sorry. It's the E495 is your document number. The date is the 19th. Tudor Enterprises, details. Then creditors control is 3363. VAT input 413. Trading inventory 2212.5, and then in the sundry account 73750, and that's equipment. Okay, so let's quickly mark that one off. Yeah, that, and I've got that one. Great stuff, great stuff. I hope everybody is still following me. So let's have a look. What's next? Yeah, so there's a few more calculations to do in this exercise, but this is also the last exercise I'm going to do that's so long. The other ones will be quite short. So sorry about this long. You have to look at me for quite a while, but it's good to work through these exercises and get the feel and practice it, and that's what you need to do at home, is practice it. Excuse me, one gets quite thirsty to talk so much. Okay, let's do the next one quickly. Blah blah. Where's my pen? Okay, where's my pen? Let's see. Okay, received a letter from Insolvent's attorney stating that he has gone into liquidation and that his personal estate has been wound up. A check constituting 40 cents in the rand from his insolvent estate was enclosed. The business issued receipt number RC03 to acknowledge receipt of this part settlement. The remainder of the outstanding debt was written off as irrecoverable. So all what that means is obviously Miss Insolvent, let's see, where is Miss Insolvent? Here we go in the debtors. She owed us 26,889 rand. Yeah, 26,889.75. So she was declared insolvent, so they wound up her estate, and so what happens then is they look at the debt that she has and pays it, and then a portion of her estate will be portioned to pay a little bit of that debt, a little bit of that debt, a little bit of that debt. So now unfortunately in this case we also fall under that, so under her liquidation. So for every rand that she owes us, we get only 40 cents back in cash. So not very good to know, but let's quickly see how much money will we get back and how much money we will have to write off. So she owes us 26,889.75. But we are getting only 40 cents for every rand, so we multiply that by 0.4. So if we multiply 26,889.75 times 0.4, because that's 40 cents, so it's 10755.90. So the check we received from the lawyers is 10755.9. So the amount that we have to write off, the amount that we need to write off will be 26,889.75 minus 10755.9, and that gives me an amount of 16133.85. Okay, so let's quickly do our T accounts. And because this is a payment, there will be the first part, it's a payment coming back from someone who owes us money, so no VAT is allowed, or no VAT is being charged or claimed. So your bank is an asset plus minus, and then it's creditor's control. It's a liability minus plus. So our bank is increasing with 10755.9, and then our creditors. Wait, did I do this right now? Not a creditor, sorry, she's a debtor, she owes us money. Sorry, it's not us going insolvent. Sorry, my bad. She's a debtor. So it's an asset plus minus. So, then our debtors decrease with 10755.9. So let's quickly put that into our book. Since our bank increased, that'll be our cash book receipts. So let's quickly complete this one. So it's RC03 on the 20th. It's Miss Insolvent. And And analysis of receipt 10755.9, and then debtors control 10755.9. Okay, but once again now it's not going to stop there, because we've still got the bad debt, or the debt that we have to write off. We still need to allocate that to a journal. So let's quickly do that. So let's see what amount. We've already calculated the amount. Okay. So then that'll be debtors control. It's an asset plus minus. Then this is called bad debt, which is an expense. It's an equity minus plus. And then VAT, SARS, because it's bad debt, SARS allow us to claim that VAT portion back. So VAT input is an asset plus minus. Okay, so we've already calculated that the debt we are writing off is 16133.85. So our debtors decrease with 16133.85. Our bad debt will be the VAT exclusive part of that, which would be 14152.5, and then the VAT input would be 1981.35, and this one as well will get written in the general journal. Like I said before, there are some exceptions to the rule. This is also one of them. Bad debt must be written in your general journal. So let's quickly do that. So that'll be JV6 on the 20th. Let's get our debits in order. So it's bad debt. Bad debt, debit 14152.50. VAT input, it's the second line, is 1981.35, and then debtors control for Insolvent, just write the name in there as well, constituting 1613385. And then the little sentence here is debtors, debtor written off, received 40 cents to the rand. Okay, and let's draw a line there. Right, let's quickly just mark all this. So we've got that one. 28, and I'm at 29 I've done. Oh, bless me. Sorry guys. Yeah, bit of sniffleitis. Alright, and then we've done that, and we've done that. We are nearly reaching the end of this exercise. Okay, next, purchased a computer slide projector for use in future board meetings. The projector was purchased on credit from Western Frontiers for 59280, but a 10% deposit was paid by check. The balance was to be settled over 6 months in accordance with a zero interest agreement. Wah, 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 wah. Alright, so we bought the projector 59280 on credit. We paid a 10% deposit by cash. Alright, so let's quickly do that. So I'm going to get my papers out there. Okay. So, first of all, now we've got creditors control. liability minus plus. We purchased equipment. It's an asset plus minus. And then we've got VAT, so money went out, so that'll be VAT input. Asset plus plus minus, but then we also need to know that we paid the bank because we paid a portion of it cash, plus minus equipment. It's an asset plus minus, and then also VAT input for that one, asset plus minus. Okay, so we've got a lot to do. Let's just break this down and take it piece by piece. Okay, so first of all, let's calculate. So 10% of this thing we paid cash. So let's just first take care of the cash part. So that'll be 59280 times 10%. That's 5928. So our bank decreased by 5928. The equipment portion of that divided by 1.14 is 5,200. Yeah, 5,200. And the VAT input is 728. So let's just quickly write that into the book. So our bank decrease, so that'll be cash book payments. So that'll be 12, 20. Okay, Western Frontiers are the details. Oops, I'm in the wrong book here. Sorry guys, sorry. That's cash book receipts. I need to be in cash book payments. 12, 20. Western Frontiers. So it's 5928. VAT input 728. And then the equipment part will be 5200, and that is equipment. Okay, so now the portion that's going on credit will be the 59280 minus 5928. So that'll be 53352. So our creditors are increasing with 53352. Our equipment is increasing then with 46800, and our VAT input will be 6552. So now let's have a look-see and see where does this one go. Creditors increase, so that'll go into your creditors journal. Got way too many papers here. So creditors journal, that'll be T112, 20th, details, Western Frontiers, creditors control 53352, VAT input 6552, and then equipment 46800. All right. Oh, that was a doozy. It was a big one. Okay, sorry, just want to mark all of them again. Okay. And we've done number 30 and we've done number 31. Excellent. Next. Let's look at the time. Sorry. Okay, still got some time. requested a rebate of 25% on one of the coffee tables that we purchased from Tudor Enterprises. The table was damaged. Oh, isn't that fun? Okay, let's do it. Okay, where's my pen again? There we go. So, creditors control, so liability minus plus. Okay, the table, so I think, yeah, what they did is, that's one of the coffee tables. We bought 3 for repurchases, 1 for the office, so I think it's that one. It's one of those that they want a rebate on. That's probably the one that was damaged. So that was the equipment account, if you remember previously. So that'll be equipment, which is an asset plus minus, and then VAT. So creditors control, equipment, yeah, and then VAT output, because we have to pay that rebate money back to SARS. It's a liability minus plus. Okay, so now we need to take this, so that'll be 840.75 multiplied by 25%, and if you put that in your calculator, you will get 210.19. So our creditors are decreasing with 210.19. Am I right? Yeah, our creditors are decreasing with, then our equipment is decreasing with the VAT exclusive amount, which would be 184.38. And then the VAT we need to pay back to SARS would be 25.81. Great, so that'll go into your creditors allowance journal. That'll be CN 31, 21st. It's Tudor Enterprises. Creditors control 210.19. VAT output 25.81. Trading inventory. Okay, so it looks like they took one of the trading inventories there instead of the equipment. Sorry, if I look at the books. Sorry. Just want to double check myself. I'm sorry, I don't want to lie to you guys. Yeah. Okay, sorry, they did not do the... No, they did. Sorry. I made a mistake on my... No, never mind. Actually, I didn't make... I did make a mistake. I said that it was trading inventory that they changed, or that they wanted the rebate on, but it turns out they didn't do it on the equipment, they did it on the trading inventory. So in other words, this accounting will be trading inventory. Sorry about that. So where was I now? Here, and trading inventory will then be 184. I see, that's always the problem if you've bought a bunch of tables or a bunch of stuff and you split, this is trading inventory, that's equipment, you don't know, you have to try and guess which one of those, did they take the trading inventory, ask the rebate for that, or did they put it through on the furniture, or in this case the equipment. Okay, sorry, when I did the exercise at home, I put it through on the equipment, but they put it through on the trading inventory. Sorry about that, I should have checked. Okay. Let's just do a mark here. Yeah, okay. And then there. Yeah, so one must always read it very, very, very carefully. Okay, sorry about that. Alright, next. It was found that the slide projector purchased on the 20th was an older model than the one advertised, but the invoice received was based on the purchase price of the newer model. The price difference between the two models is 5,000 Rand, excluding VAT. This was discussed with Western Frontiers, and credit number C14 was received to account for this discrepancy. Okay, so let's do our T accounts again. Oh, I think my pen is getting a bit dry. Let me just see if I can find another pen quickly. Yeah, got it? Let's try this. Ah, that's better. Okay, so let's say we purchased on credit. Okay, so here we go again. So it's creditors control. It's a liability minus plus. It's equipment, if I'm not mistaken. It's an asset plus minus. Okay, there are, let me just see, and then VAT output here. So liability minus plus. Okay, so they tell us it's 5,000 Rand excluding VAT, so we already know that our equipment is decreasing with 5,000. Then our VAT on that amount, 5,000, if you calculate the VAT on that, is 700. So then the creditors are decreasing with 5,700. So now that goes into our creditors allowance journal. Yeah. So that'll be C11422. It's Western Frontiers. Creditors control 5700. That output 700. And then in the sundry accounts, 5,000 for equipment. Okay. All right. Don't think we're doing too badly. Yeah, I'm sorry if I sometimes also make a mistake, but anybody can make a mistake. That's why the whole thing is you need to practice that you don't make mistakes. So you need to practice as much as possible. Okay, I've got time for a few more exercises before we'll continue this at a later stage. Oh, okay. Well, this new pen of mine is making quite a few marks here. Guy who's bought this is not going to be too happy. All right. So now we sold trading inventory. Sold trading inventory on credit to Owen Enterprises. We sold them, so they are our debtors. It's an asset plus minus. Sorry. So it's sales, equity minus plus, and it's VAT, money came in, so it's VAT output. It's a liability minus plus. There's a sale that took place. So it's trading inventory, which is an asset plus minus, and cost of sales again, equity minus plus. Alright, so how much money did he spend with us? 9690. So our debtors are increasing with 9690. Our sales, with the VAT exclusive amount, it's 8500. And then the VAT output is 1190. So now, of course, if you use the magic block and you calculate your cost price, it will be 8500 divided by 150. 8500 divided by 150 multiplied by 100, and that'll give you 5666.67, and your cost of sales 5666.67. Great. So let's quickly put that in our book. So debtors increase, so that'll go into your debtors journal. So that'll be debtors journal, debtors. Here we go. It's D5. 23. Owens Enterprises. 9690. VAT 1190. Sales 8500. 8500. And your cost of sales and trading inventory 5666.67. Okay, let's mark that one. Great stuff, great stuff. Number 34, done. No, sorry, I numbered them differently in the book. And then cash sales according to cash register roll again. Okay, cash sales according to cash register roll. So, let's do this again. It's your bank, which is an asset plus minus, sales, equity minus plus, money came in, so it's VAT output, it's liability minus plus, and then we've got our trading inventory, and our cost of sales, which is equity minus plus. Alright, so let's just quickly see. I'm just going to copy it. So our bank is increasing, the amount is 15390. Our sales 13500. Our VAT output 1890, and then if you calculate your cost of sales, it is 9000 exactly. So your bank increase, so that'll be your cash book receipts. So let's quickly complete this one here. So that cash register roll 25, cash sales, analysis of receipts, it's 15390. VAT output is 1890. Sales 13500. And then cost of sales and trading inventory 9000. Okay, so now that one is done. Great. And then done that one. Alright. Okay. Owens Enterprises returned goods and a credit note was issued for 3,420 Rand. So let's tackle that one. Yeah, bookkeeping is a lot of work, it's a lot of writing. Yeah. especially if you only have 3.5 hours to write the exam, and yeah, you need to be quite fast. Good. All right. Let's do the next one quickly. Owens Enterprises returned goods. Owens Enterprises is a debtor. Yeah, there we go. So debtors control, it's an asset plus minus. The other leg will be sales returns. It's an equity minus plus. And then it will be VAT input, asset plus minus. Okay. And then we also need to reverse the trading inventory because stock was returned. So yeah, so obviously we have to put that on the books. Okay, so we gave them a check for 3,420. Am I right? Yes, 3,420. So our debtors control is decreasing with 3,420. Our sales returns gets debited with 3,000, that's the VAT exclusive amount, and then the VAT input is 420. Okay, then the trading inventory, when you work out the cost price for that, it will be 3,000 divided by 150 multiplied by 100, and that gives you exactly 2,000. So your trading inventory is increasing again with 2,000 and your cost of sale gets credited with 2,000. Alright, so let's put this in our book. Debtors control minus, that'll be your debtors allowance journal. Debtors allowance journal, here we go. It's DA3, 25th. Details will be Owens Enterprises, 3420, VAT 420, exactly as we calculated it, sales returns 3,000, and then cost of sales trading inventory 2,000. Okay. Okay, and then there. Alright, sorry, I just want to see the time. Okay, I think that's enough for now. We will continue this exercise at a later stage, so for now you can practice this. So let's just quickly focus in on all the work that we've done, and remember, feel free to contact me on that email address that's on the description. That's on the description part of this movie. If you've got any questions or something that you are unsure about, I would get back to you as soon as possible. Okay, so let's just do this quickly again. Okay, that you should have by now. Yeah, sorry, that's that one I scratched out. Okay, and that's it. So I'll see you guys next time.